Y'all come on in, man. We're going to be starting live in a couple minutes. I'm going to go live on a few different platforms. Hope you guys are good. Happy Friday. Yes, let's do this. You guys bear with me here. Cool. I think I'm live on IG, live on Facebook and YouTube. What's going on, y'all? This is Marcus, BlackMarriedDebtFree. I hope you're having an amazing day. Let me do one thing. What's good, y'all? What's good? Come on in, guys. Let's see. What up? What up? What up? What's up, guys? Thank you for coming on in. We're gonna get started in like 2 seconds. Hope you guys are having a good one. We're gonna be talking about we're gonna be going over some investing in the stock market basics. So if you're an expert, if you are a stock head, then this might not be for you. You just paid your last debt today. Congratulations. That's what's up. Congratulations. We're not going to go over every strategy in investing in the stock market because I am not familiar with every strategy on investing in the stock market, but I am familiar on a couple strategies, and we're just going to go over some basics because I got a lot of questions yesterday in regards to a post that I posted. Shire and I posted yesterday, so we got 2 types of responses. Well, really 3 types of responses. The overwhelming majority of the response was like, "Cool post," likes and all that good stuff. So like, that's cool. I mean, who doesn't like likes, right? But then we got another response, which was somewhat of a negative as far as the post was a post that just gave a statistic of what your stimulus could do if you didn't touch it. We weren't telling you to do it. We weren't suggesting you do it. Shire and I, with our platforms here on YouTube, Instagram, Facebook, we specifically never tell you what to do. We have over 100 videos on YouTube. You see us on Instagram, Facebook, and we never once have told anyone what to do. We simply put out information, and whatever you choose to do with that information, then great. We also tell what we do. And if you choose to do what we do, we don't guarantee any results. We don't guarantee any of that. While I'm there, disclaimer, we aren't financial advisors. A lot of people say they get frustrated with people who talk money who aren't financial advisors. We're not financial advisors. We do talk about money, but we don't suggest you do anything. We don't advise you to do anything. We're just having a conversation, and it's a fun conversation to have, and it's a conversation that's necessary because for many of us in the African American community, we do not talk about money. We did not talk about money growing up. So we are trying to change that narrative. So that's essentially what we're trying to do, by having these conversations. But anyway, so the post yesterday, so that's the disclaimer. We're not financial advisors. I'm not giving you financial advice today. We're just having a conversation, open dialogue, which I think we need to have more. We at the dinner table, we talking, and that's all we're doing essentially. And I will be sharing just some information with you. So the post yesterday was, it says, before you spend your stimulus, consider this. If a family of 2 adults, 2 children invest their $3,400 stimulus check and never add anything to it, then these funds will grow to $20,430 in 20 years. Now, a footnote on that same post says we're assuming 9% return on that investment. Okay, so we're not talking about putting your money in a bank and not touching it. We're talking about investing it. So what a lot of people were saying is that when we said the word invest, we didn't go into, first of all, it was like a Twitter post, so you only got 140 characters. But they said we didn't go into invest in what? Very good question. Very good question. So we're going to go over some basics. And like I said, on the front end of this, I'm not a stock market guru. Shara and I, we invest in using one particular really hands-off strategy that I'm going to share with you. We also invest in real estate, and those are the two things that we're doing to invest. Now, with that post, we made no suggestions. We told you not to do anything. We just said, consider this. I'm not saving my $3,400 that we got, all of it, and putting it in the market. So we are by no means telling anyone to do that. We have to provide content, right? So that's what we were doing. We were just simply providing statistics, something interesting. And what I think happens is, and I do that too, is like when you see people post stuff and it's just like a little quick post, it can be frustrating because it's like, well, you're not giving me the rest. You're not giving me the answers to the test, but that's why it's very important that we self-educate, and take it upon ourselves to like do our research. So anyway, we're going to get into a simple strategy that Shara and I use. This is one way to invest. When we use the word invest and we use it very generically and we talk about the returns you can get, I'm going to tell you exactly what we're talking about. So we're going to kill all of the, what do you mean invest? Invest in what? 401, Bitcoin. We're killing all that with this conversation. So this is just, like I said, one strategy. I'm not talking about, when we say invest, we're not talking about investing in the stock market. You see the people on the trade room floor, there's computers, there's chaos, everybody's pointing this way and that way. And that's what we think about when we hear market or stock market. I'm not talking about that. I'm talking about a very passive, simple way to invest. And I'll tell you the vehicles that you can use. So the first thing we're going to talk about is a Roth IRA. We have a video on YouTube showing how simple it is to open a Roth IRA account. Okay, so what a Roth IRA account is, and like I said on the front end, if you're like a investing guru, then you may be on another level. But these are for us that are really, just getting our feet wet in this game. So a Roth IRA. A Roth IRA is an individual account allowing a person to set aside after-tax income up to $6,000 a year. Both earnings on the account and the deposits can be withdrawn at 59.5, tax and penalty free. Now, if you are investing in a Roth IRA, you can take out the money that you've put in. You cannot take out the earned money. You can take out the money that you have put in penalty free, but not tax free. So that's something for you to consider. So a Roth IRA is simply a vehicle in which you can invest. Another vehicle, simple vehicle. Let's say you've done the Roth IRA, you've put your $6,000 in, and you're like, I have more money. The reason why first of all, the reason why you can only put $6,000 a year is because this is a tax. It has a lot of tax benefits. It's after tax, so they're gonna put a cap on it, right? So let's say you're saying, okay, I have more money than my $6,000. I want to invest more. You may then open what is called a brokerage account, which is an account that connects buyers to sellers. It's essentially the same thing as a Roth IRA without the tax benefits, right? It doesn't have the same benefits, so there's no cap. Okay? It's just a platform that you can buy investments. And we're going to talk about what those investments are, because a lot of people was like, what do you mean investments? So we've already talked about the vehicle in which we're going to get into to go to our investment. Now I'm going to tell you where we're going. So the vehicles are two simple ones. There's many other vehicles. There's many other ways, but we're simply talking about a Roth IRA and a regular brokerage account. Those are the two vehicles we just hopped in, and now we drive into the investment. The type of investment that we're driving to, we're just talking about one here, is an index fund. Say it with me. Say index fund. So an index fund is the investment. An index fund is a type of mutual fund created to match or track a financial market, i.e. the S&P 500, the NASDAQ. This fund is not actively managed, so there's nobody on the other end playing with the fund and moving pieces and all that kind of stuff. Okay? And because of that, the fees are much lower than other investments, other mutual funds. So it's literally it's created to mirror the market so that no one has to be in there touching it. Okay. And an index fund has a lot of little pieces of businesses, a lot of different pieces of companies. Okay. So you can get an index fund that it tracks the technology companies. You can get an index fund that tracks real estate, owns pieces of individual pieces of real estate. You can get an index fund that tracks whatever sector you want it to track. Or you can do like Shire and I do, and many others who have been successful, get an index fund that tracks everything. You can get index funds that track the complete stock market. So it literally just mirrors the stock market, and that's instant diversification. It's simple. I didn't have to, do any crazy amount of research. I simply get an index fund that is not actively managed. It has extremely low fees, which is very important when you go to withdraw. When you retire, you want to have invested in something that has low fees, because those fees will literally eat at your return over time. Okay, so that's another plus of index funds. So when we say invest and we use generic terms like if you invest, da 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 da, we're talking about investing in an index fund that tracks the complete stock market. Set it and forget it. Because one thing about investing that we also want to share is that it's a long game thing. We're talking 10 years, talking 10-year minimum. If you're looking to drop your money into something and get it right back, then you might want to go to Vegas when they open up after the quarantine, because that's not what we're talking about. That's not what we're talking about. So, and another disclaimer, we're talking about investing right now, but if you don't have an emergency fund, if you've lost your job, if you're not in a position to invest, do not invest. We're not telling you to take the money that is going to provide food for your family because you've been laid off because of the quarantine. We're not telling you to take that money and invest it. We're talking to those like Shire and myself who were able to work from home, who haven't been necessarily negatively affected by the quarantine and all that, and we haven't lost our jobs. And that money was literally like a bump for us. It was like, oh man, this is really cool. We're talking to those individuals. We're not talking to you and telling you to invest your money if you need your money. Does that make sense? I hope it does. So back to what we were talking about. So we got the vehicles, we got the Roth IRA, and we got the different and we went over what a brokerage account is. Now we've talked about where we're driving to. We're driving to an index fund. That's our destination, right? So let me tell you, I talked about the different indexes that you can invest in. And we talked about a total stock market index, an index that tracks the complete stock market. So I'm going to give you two from two different brokerages that you should research. I'm not telling you to get off this and go grab them, but I'm telling you to research them, and I'm telling you that Shire and I have both of these. So the first is from a brokerage named Vanguard, okay? And the particular index I'm talking about is VTSAX, okay? VTSAX is a index that tracks the total stock market. It's created to mirror the market, right? And it has pieces of, many businesses, right? It has pieces of, it holds Microsoft, it holds Apple, Amazon, Facebook, and many other companies. Those are just a few. Okay. So here's another thing. So people get frustrated when we talk about the returns. This has a 10-year historical return of 10.70%. And that's with what happened in March, with the stock market plummeting 30%. It still has a 10-year return of 10.70%. I spoke about this being a long-term thing. So in March, when the stock market dipped 30%, everybody was ready to run for the hills. People were selling their holdings, and everybody was bugging out, right? I was bugging out. I lost $10,000 in like 4 weeks. So I was like, whoa. But the market, it does this. It's gonna do this. But if you look at, despite all that, if you look at the overall trajectory, it's still going up. And that's one thing we have to remember. So just within the past 3 weeks, so it dipped in March, and then, I'm sorry, dipped in, I believe, was it late February? I have to look at it. But whenever the market dropped, it dropped 30%. Well, it's gone up 17% since then, right? And so it's going to go down again, and it's going to go up again. But if you look at the historical data of the market, it goes up. It's been going up for 100 years. So you just have to be consistent and know that it's going to be ups and downs with it, but I'm going to stay the course. And so when we give you a statistic and we say if the return is 9%, and you say, how can I get 9%? VTSAX index fund has returned 10.7% over the past 10 years. That's facts. It's not conjecture. It's not innuendo. That's facts. So that is one thing that you can invest in. That one has returned 10.58. Not so that index has returned 10.58 over the past 10 years, right? And the cost per share is $67, 67.7. So to grab a share of that, it would be $67. You would get one share of the VTSAX index. So let's say if you had a Roth account set up, you set your Roth up, you want to contribute the max. You want to contribute $6,000 a year, which would be $500 a month. So your $500 a month, you would set up your Roth IRA to go grab as many shares as $500 worth of shares into this VTSAX. So 500 divided by 67. I don't have the number in my head, but you could do the math. You would grab that many shares of that index, and whatever that index did, you would reap the benefits of it. It's that simple. So that index, if those shares returned you 10%, your money goes up 10%. If those shares drop 10%, your money drops 10%. So that's kind of the idea. Another brokerage company. So let's say the thing about Vanguard is you need at least $3,000 to start. Some people might say, man, I like it, all sounds good, but I don't have 3 G's to just dump on it. Cool. Another brokerage that has no minimum entry fee, Fidelity. So Fidelity has an index that tracks the total stock market as well. And for everybody on YouTube, I'm going to get to your questions. I'm sorry, I've just been going. So everybody, I'm going to get to your questions. Like I said, we're not talking Bitcoin. We're not talking anything that I don't understand. And that's the thing, is if you don't understand something, you should either do your research or don't mess with it, right? So I'm talking about one strategy specifically, and that's index funds. So Fidelity has a index that tracks the total stock market as well. It is called FSKAX. FSKAX. That's like a tongue twister. But this index actually holds shares of Microsoft, Apple, Amazon, a lot of blue chip stocks. It tracks the total stock market, and it has a historical 10-year return of 10.7. So that's the one that's 10.7. The cost per share is $77.07, but there is no minimum. So I don't need $3,000 to start dabbling in this. I can go grab one share today. $77. I got $77. I'm gonna just go grab me a share. Right? So that is what we can do with the Roth IRA, with the brokerage account. With both of those accounts, I can go grab shares of VTSAX, or I can grab a share of FSKAX with Fidelity. And these two funds have returned over 10% over the past 10 years. So there's your 9% that we put in the post on Instagram. That's your return right there. And that's including the dip that we just had in March. So one thing I talked about yesterday was that it's all about mindset. So if I come into the mindset when it comes to investing, and I'm like, it doesn't work, it's fake, then I would never get into it to find out if it was true or not. I would never do the research to find out if it was true or not. I think a lot of us, we just assume it's fake. We assume that it's the people trading on the stockroom floor. Man, that looks crazy. I'm not trying to get involved with that. But we don't do the research to see, like, maybe there's an easier, simpler way for me to get a piece of this. You could set up your Roth IRA and just sit and chill. You don't have to be checking it every day. You don't have to be moving money around. Okay, I need to we're not talking about day trading. Day traders buy something at 9 in the morning and they may sell it at 10. We're not talking about something that is going to take a lot of your time and a lot of your energy. We're talking about a very passive way to be in the room with those people. We're speaking this. We're in the same room, but we're just doing a different thing. And so this is a way. That is a simple way to invest in the market and not really know much about it, right? So I want to talk about something. You say, okay, I gained 9%, whatever, 10%. But there's a magic pixie dust that I want to share with you guys. And it's called compound interest. Now, I took a personal finance class at community college. And when I learned about compound interest, it was like I discovered plutonium. Compound interest is like the magic fairy dust that makes your money just. Compound interest is the addition of interest to the principal. In other words, it's interest on interest. So when you hit compound interest and that thing starts to congeal, I can't think of, that's the best word I could come up with. It grows your money exponentially. Now you can invest in, so when you earn money on an investment, you get something called dividends. Some investments pay heavier dividends to their shareholders than others. And you can do one of two things. You can choose to reinvest those dividends, which helps trigger the compound interest, or you can cash out the dividends and just have the money. If we leave our dividends and we reinvest them to help trigger that compound interest, because once that thing starts to churn and go, your money grows, man. And so that's something that I wanted to, share with you all too. So I hope that helped you guys. I'm going to answer some questions now. So for everybody on Instagram who had the question of what do I invest in? You guys always say stuff like, if you invest, what does that mean? Index funds is a simple strategy that you can use. Anyone can use to invest in the stock market, without knowing, a whole lot about it. So got some homework for you guys. I'm going to go through and answer questions, but before I do, I got some homework for you guys. If this is the first time you're hearing about what I'm sharing with you, go and watch some YouTube videos. First of all, shout out to Our Rich Journey, my friends, Mon and Christina at Our Rich Journey. Go Google them on YouTube. That's the first thing I want you to do. Second of all, no, Kimberly, that's not the only way to compound interest. It will just happen over time, the longer something sits. But that's a good way to speed up the process and to fire that thing off. You know what I mean? Go Google Our Rich Journey. I've learned so much from them. Those two individuals retired in their late 30s, and they mostly used the index fund strategy. They did do real estate. They did do some other things. But what got them to millions is them investing in index funds. So when people say, I can't do it, or, things of that nature, that's not true, because I know people who have done it and who are preaching and teaching about how they did it. And the information is there. So please do your research. So that's your homework. Google, research index funds. If this is the first time you're hearing about this, go to YouTube, check out, we've did some videos on index funds, but specifically check out my friends, Our Rich Journey. There are many others who talk about it, but that's my people. So I'm shouting them out specifically. But you guys do your homework. No, somebody says, am I sick? No, I'm not sick. I might just look tired though. But to go back over my disclaimers, we're going to go over the questions in 1 second. To go back over my disclaimers, if you got your stimulus check and you needed that money to pay your bills, and you do not have an emergency fund, you lost your job, you need that money. We're not telling you to save your money or invest your money, or we're not telling you to do that. We're speaking to an individual, to those who the stimulus check was just simply a bump, simply something extra. We're speaking to that individual. Okay, so let's go over some of the questions. So we're gonna go Instagram first, then I'm gonna go YouTube. So y'all stay with me. Stay with me, because I may answer your question before I get to yours. Somebody else might have already asked it. So Kimberly on Instagram, you asked, is that the only way to trigger compound interest? No, the only way to trigger compound interest isn't by just reinvesting dividends. But like I said, it fires those pistons off, and it could speed up that process for sure. Very helpful. Thank you so much. May God continue to bless you. Thank you. I really appreciate that. Y'all share this video, man, because like I said, we had a lot of people in the comments who wanted this information. So I thought I'd just go live and give you this, free game. things to say. I may have missed this, but when you move your money into the index fund, is it like a savings account where you can keep adding to it? Yes. So let's say, like I said on the front end, if you're using a Roth IRA as your investment vehicle, if you're using that as your means to buy the indexes, you can, there's a cap because you get some tax advantages. So the man is not going to let you put but so much money. So you can only put $6,000 a year in that, right? So you set up your account, Roth IRA, and you set it up that you want to contribute the max. So now the Roth IRA is going to go to your bank account and it's going to take out $500 a month to get you to your $6,000 a year max. Now you have to go and tell your Roth IRA what to do with that money. So that's when you assign that money to an index, right? And that's how that works. Brokerage accounts, brokerage accounts work a little differently because there's no limit. You go in your brokerage account and just grab an index. Brokerage account is just the middleman. So you can say, I want to buy this right now, and you can go grab that with the brokerage account. It's just the platform in which you go to buy those indexes. So those two are a little bit different. Okay, hope that answered your question. Somebody says this is good. Thank you. Should you pay off your student loans even though it's been deferred? So let's talk about that. Good question. Once again, I'm not a financial advisor. Me and Shire do not give financial advice. We just talk money. So if we're talking money, it's all about you. It's all about what you want to do. I can't make that decision for you. If it were me, though, it's really about what type of person you are. Me, I hated debt. So let's say if my student loans were crazy and I know I didn't have a lot of money to, if all I had was the stimulus check, and aside from that, I only had the ability to pay the minimum on my student loans, I probably used, and the loans are deferred, me personally, would use that money to buy assets. And that's me. That may be the wrong advice. And it's not advice. But I think that's what Marcus would do. Now, if I was in the process of paying off my debt and doing a snowball and I was attacking my student loans prior to them halting the interest, I would attack it harder. I would put all my stimulus money on the student loans. So if you were in payoff mode, then you hit the gas and use your stimulus and use the money, the penny you found on the street, use all your money if you're in payoff mode. But if you were in just management mode and you were only paying your minimums anyway, I wouldn't take my stimulus and plop it on my student loan necessarily, because you potentially can do more things with that money, and you can grow that money, or you know what I mean. It depends on what your situation is, and that's why none of this stuff is cookie cutter. It's all about your situation. Like my situation is literally could be different from my wife's situation. So keep that in mind. Hopefully that helped. Hopefully that answers your question. So we're gonna go to YouTube and we're gonna answer some of those questions. YouTube, what up? No, I'm not sick. Hey, brother, enjoy your videos. Are you looking forward to more? Absolutely, guys. Check out our YouTube channel. We have a lot of free content there. I'm excited to hear your ideas about investing. Thank you. Are Roth IRAs for saving up to invest? No. A Roth IRA is an investment account. It's not like a savings account. Now, I did say on the front end, if you're putting money into a Roth IRA, you can technically go and take out the money you've put into it. You can't take out the money that has accrued because of your gains, but you can take out the money that you have put into it technically, but you will be taxed. No, you won't be taxed because it's pre-tax. Take that back. But yes, you can take your money out, but you just don't want to do that. Like if you want a bank account, just get a bank account. If you want to grow your money and invest it, you should only put money in there that you're okay with it being in there for 10 years plus, period. Okay, so I hope that answered that question. If you're not into crypto, are you really investing? I'm not gonna hate on the whole crypto thing, but I'm definitely sick of the forex people trolling and jumping in our post on Instagram. That's all I will say about. I don't know about the forex and the Bitcoin and all that stuff, so I'm not gonna speak bad on it. But I'm talking about something that's a lot simpler. Okay, somebody says how much Bitcoin? I'm not into Bitcoin. I'm new to investing, but I bought mRNA stock and it's doing pretty well. Dope. Congrats. That's great to hear, man. Bitcoin has a larger return than investing in gold and the S&P 500. We chilling over here. We about chilling. We about passive income. So my strategy, the index fund strategy, is very passive. Bitcoin seems stressful to me. Now I may be wrong. I haven't done my research on it, but we're not talking about Bitcoin. We're talking about people who just want to chill. Evan, what's up, man? I'm talking just finance on this joint, not music. I'm gonna tell you what I did with my stimulus. Good question. Okay. Okay, cool. We got some trolls on YouTube. Love it, man. Is the total interest amount compound interest? Is the total interest amount compound interest? No, no. Um, I'm just gonna say no to that one. Do you recommend opening a Roth IRA in addition to employer 401? See, if you notice, I did not go into the 401k thing. Great question, though. If you have the money, first of all, I think you should max out your 401 up to your employer contribution. And I think you should have a Roth as well. I have both. So I max out into my employer contribution, and then I contribute a little more. We're almost maxed out to our 401. You can put 19, I think it's 19,000 max into your 401. So if you can max that out, do that, and then get a 401, or put a certain amount into your. I'm sorry, max out your 401 and then get an IRA. Or you can put a certain amount into your 401 and still have an IRA. It's totally up to you. We don't contribute the full 19,000 to our 401. We're trending that way, but I still do have a 401 and a Roth IRA. And somebody says, "Hey, El Grove neighbor." Cool. Somebody's my neighbor. Dope. Let's see. So we got some more questions. So somebody said, "What did I do with my stimulus? What did we do with our stimulus?" Great question. We didn't save it. We didn't save the entire $3,400 into a Roth IRA. So that shows you that we were not telling you what to do with your money, because we didn't even do that with our money. Shire got hers, I got mine, the kids got theirs. I'm saving mine for an investment property. We'll be buying an investment property this year. So the overwhelming majority of mine was saved for that. Shire is doing some different things with her money. So yeah, if you could do with your money whatever you want. We just simply put that statistic out there just in case you were interested. So yeah, we don't have student loans, we don't have debt. We're building wealth at this point. We're contributing to our 401, to our Roth. So with my portion of the stimulus, I'm putting it towards my investment property fund to get my third investment property this end of this year, early next year. So that's what I did with mine. So yeah, man, I hope this helps you guys. So you got a couple more questions. What are other forms of passive income? My man George Pitts. Shout out to my man George Pitts, Mr. George Pitts on Instagram. Y'all follow him. He talks about a lot about creating courses, selling products, creating products and selling them. If you create something, you put it online and you sell it. When you sleep, you're making money. That's passive. If you invest in real estate, let's say you are able to get a real estate property, and you have tenants that live there, they're paying you while you sleep. So there's many ways to generate passive income. The investing thing is very passive. If I set up a Roth IRA to take out, contribute to the max, it's taking out $500 a month. It's working for me while I sleep. Well, technically it's not, because the market isn't open, but you get the point. It's passive. So yeah, those are some different ways to generate passive income. Hope that helped. How do you vet and choose which investment company you open accounts with? So I went over 2 different companies. I went over Vanguard and I went over Fidelity. And you just kind of compare and contrast. Like, what are the fees? How much? So I broke down 2 simple investments: VTSAX with Vanguard, and FSKAX with Fidelity. They do the similar. They pretty much do essentially the same thing, but one costs $77 per share, and the other costs $67 per share. Now, Fidelity costs more, but it also pays more in dividends, slightly more. Vanguard has a $3,000 minimum to get in, where Fidelity has no minimum. The fees are comparable. Fidelity's fees are a little lower. So you just compare, contrast different brokerage companies, and you just kind of go that way. You know what I mean? Let's see. What age can you cash out the Roth IRA? 59 and a half. You can cash it out at 59 and a half without penalties. But there are some workarounds. Now, that's next level investing, and I defer to my friend's Irish Journey for stuff like that. So yeah, check them out. Can you save this? Yes, this will be saved. I will be turning in this. You guys can go to my YouTube to catch this. This will live there. This will probably be a podcast at some point. So yes, this will be saved. Instagram will only let me save it for 24 hours. But I did this, guys, because we got a lot of questions yesterday. A lot of vitriol. Nah, not a lot, but just a little frustration, I think, on people when we say stuff like invest and get 9%. People are like, invest in what? What do you mean invest? And then you have those people who's like, why would I invest when people need to save their stimulus for X, Y, Z? Well, then I'm not talking to them. If you need to, once again, as a final disclaimer, if you need your stimulus to help you live, if you need your stimulus to build your emergency fund, if you need your stimulus to, you can do whatever you want with your stimulus. You ain't got to do nothing I'm telling you. Nothing me and Shar are telling you do you have to do, because we're not telling you to do anything. We're just having a money conversation, which is a conversation that we never had at the dinner table as kids. We're having it at the dinner table via social media. So I hope you guys enjoyed this. I hope I answered all of your questions. We got one more. Can you do a video explaining how compound interest works? Yes, Kimberly, that is excellent. I will be doing that video. Please subscribe to our YouTube channel, Black Married Debt Free on YouTube. We have over 100 videos, and that video will be coming. Thank you very much, Kimberly. Pan African Slick says, are those mutual funds that you mentioned? Yes, they are index funds, which an index fund is a type of mutual fund, but it's not actively managed and it has lower fees. Yes, research Vanguard's VTSAX and Fidelity's FSKAX. There's many more indexes. Those are just 2 very generic set it and forget it style indexes that track the entire stock market. So if you don't want to be dabbling in, if you just want to set something up to get started, something that is going to get you a little piece of everything, those are 2 good options. Once again, this was a very basic level investing. So if you're talking about Forex and Bitcoin and day trading and all that stuff, that's not what we discussed here. You want to holler at my man. Shout out to I forget his name. The Wall Street Trapper. If you really want to go next level, check him out. You know, we were just talking about very basic investing, but it's basic, but it's not basic. You see what I'm saying? Like I stated, people have made millions doing exactly what I just broke down to you in this video. People have retired in their 30s doing exactly what I broke down to you in this video. So it's basic, but it's not basic. So I hope you guys enjoyed that. I hope I answered all your questions. Let me see if Facebook has any questions. Facebook's generally pretty quiet. Yeah, Facebook is quiet. So yeah, I hope you guys enjoyed this video. Please go back and watch this video in its entirety because I'm sure I answered your question. Whatever your question is, I probably answered it in this video earlier on. Just jumping in. Everybody who's just jumping on IG, watch the playback of this. I answered a lot of the questions that I'm sure you all had. So I had a great time being on with you guys. If you're looking for more information, more deep dives on how to pay off debt, how to build wealth, if this, is just too broad and you want to really dig deep, and on Instagram, you can go to our masterclass. We created a masterclass that outlines how me and Shira, two regular Black folks in their 30s, paid off 6 figures of debt. And now we have built a 6-figure net worth that, despite all this craziness, thank God, is trending up. So we outlined exactly how we did it, and we created a masterclass that you can get right now. All you have to do is click the link in our description on Instagram. It's in the description on YouTube, and it's also in the description on Facebook, which we were streaming live on right now. So thank you guys for being on. We had a lot of people on, and we appreciate it. Any last questions? Any last questions? If not, all hearts and minds clear. Sorry, I'm kind of a churchy dude. We will see you on the next one, you guys. Praying everybody stay safe. And this is all secondary to your health. This is all secondary to spending time with your family. This is really a secondary topic. But it's something that we still got to talk about, because when all this crazy COVID stuff is over, we're still going back to real life. So, this is definitely secondary to a lot of people's current situation, but this is still something that I feel we're going to need to talk about. And so I thank you guys for being on. I'll let y'all later. Have a great weekend. Peace.